morning. You're watching Businessworld Live. I'm Danie Laurel. Happy Friday. It's the start of a new trading day. Let's get straight to our top story. The Finance Department is opposing calls for the suspension of excise taxes on petroleum products, saying this would result in revenue losses amounting to as much as 131.4 billion pesos. Now, the agency said the government would stand to lose 24.7 billion in excise revenues and another 106.7 billion pesos in incremental income collected through the train law in 2022 if the excise taxes on fuel are suspended. The Department of Finance said proposals to suspend petroleum excise taxes must be appropriately studied as the projected foregone revenues may affect the government's spending plan for COVID-19 recovery measures. Now, at present, excise tax for gasoline stands at 10 pesos per liter, while for diesel it's at 6 pesos per liter, and finally it's 5 pesos per liter for kerosene. Energy Secretary Alfonso Cusi earlier said suspending excise taxes on fuel can bring down prices by as much as 8 to 10 pesos. Local oil players increased the pump prices for the 8th straight week on Tuesday, October 19th. Now, the Bangko Sentral says it will focus on maintaining policy support to help drive economic recovery. BSP Governor Ben Diokno said many other central banks have started reassessing their policy settings in view of the surging prices. That's in light of strengthening demand and persisting supply constraints, spurring inflationary scares around the world. But Diokno said he is confident that the Philippines is well positioned to recover with the possible tightening of global financial conditions. Diokno said the Bangko Sentral can tap policy tools for such incidents, including a timely participation in the foreign exchange market to help tame volatility. In any case, he said record low policy rates will be maintained between now and the end of the year. After all, the BSP chief said he believes inflation is still transitory and will return to within target next year and in 2023. TGIF, and thank God for some reopenings around the world. Let's end the week with a virus check. You can see on my terminal here. New Zealand, first of all, set a vaccination target rate of 90% for its capital, Auckland, to exit a lockdown. You've also got Melbourne set to reopen after more than 260 cumulative days under quarantine. Cases dropping in Singapore, which has already extended the restrictions amid the rising infections. But you've also got Thailand allowing more foreigners to visit. Tokyo also easing curbs on restaurants, but not so fast because over in Europe, as winter begins to descend there, the lockdowns are making a comeback, specifically in low vaccinated countries. You've got Eastern Europe and Russia. And one thing to note here, the World Health Organization believes the pandemic will, quote, drag deep into 2022. So the outlook over the coming months appearing increasingly dire. And dire seems to be the case, but not as rosy for the markets. Over in Asia, stocks are opening in the red amid some disappointing earnings in the United States. And another thing is that China Evergrande Group will be in focus today. There's a deadline there for them to pay $83.5 million of a coupon bond. And this happens even as the S&P 500 edged up to a record. But then you've got the tech players dragging down the sentiment over in the US. Snap, which of course owns Snapchat, tumbled on a tempered earnings outlook, and that dragged down the likes of Facebook and Google as well. But nevertheless, if you take a look at the general stance, the global equity markets are set for a third weekly advance. You've got crude oil fluctuating and Bitcoin finally steadying after its recent record. And of course, on our index side, you also do seem to be feeling a pullback from the rally that we've seen yesterday. We're down by 0.3%. Back below the 7,300 levels we broke through yesterday. That was the highest in 20 months, the 6 straight days of gain. Foreign funds actively buying yesterday's session as well. And market watchers saying that the market investors remain optimistic. But here to chat with us about whether this will be the play of the day, whether profit taking is actually due, we have with us Japhet Tantiangco, is Senior Research Supervisor over at Philstocks. Good morning, Japhet, and welcome to Business World Live.
Good morning, Ma'am Dani. Thank you very much for inviting me on your show.
Okay, nakakahinayang naman, Japhet. We've already seen, the highest since 20 months, and then we were hoping that we would be staying above 7,300. What is going on here? Were you expecting profit taking today?
Well, yes. I think it's a healthy. What we're having right now is a healthy pullback. We're seeing profit taking right now, which is expected given that the market has already been rallying for the 6 straight days. However, if you're going to look at the 6 straight days of rally by the market, we see signs of optimism there. If you're going to look at the market's numbers, first and foremost, the net value turnover during the 6 day period is averaging 9.5 billion, which is above the year to date average of just 7.3 billion. So this shows that the 6 day rally that we had has conviction. There's really more investors coming in, buying into the market, and at the same time, there's the participation, or I'd rather the aid from foreign investors. So in the 6 straight days of rally, total net foreign buying was at 1.5 billion. So there's really support from foreign. The rally that we saw in the past 6 days really had support from foreigners. And if you're going to look at the narratives, of course, you have the improving COVID-19 situation, continuous vaccination campaign. So of course, all pointing to further easing of restrictions moving forward. So the narratives are also there. Of course, there's still risk, and that includes, of course, the threat of inflation to the market.
Okay, let's go back to that inflation threat in a while, but let's take a look at our charts here. A little bit of confusion because when you take a look at the top chart, you can see that we are nevertheless in an upward trend, breaking above the moving day averages. You've also got the MACD signaling some optimism, momentum, but then you look at the RSI and it seems already overbought. So where is this going to be going, and how much of a pullback are you expecting here, and will this be continuing nevertheless on an upward longer term trend?
Okay, with respect to technicals, well, both the MACD and the RSI is reflecting the bullishness of the market, with with the MACD rising and with the RSI already at overbought territory. But of course, given that as mentioned, the RSI is already at overbought territory, which is why we are having this profit taking that we have today. Nevertheless, we see 7,300 as a resistance, and the market just went above that yesterday. So right now, the market is testing the validity of that level. If it is able to sustain 7.3, then the next this is going to become our new support, whereas the new resistance is seen at 7.5. Now, if 7.3 fails to hold, then the market could first retest its 10-day exponential moving average, and we're seeing that near near seven around 7,200. Now, if 7,200 still fails, then the market could fall to its support range, which is at the 7,000 to 7,100 level.
Okay, Japhet, how important are the third quarter earnings gonna be here, or has this already been priced in to be lower than what we were hoping for, especially since we returned to ECQ in August, at least in Metro Manila?
Well, with respect to the third quarter earnings, I believe that's already been priced in by investors. Though of course they're still hoping for surprises, but most of it has already been priced in. Investors are already expecting, quite dismal third quarter results because of the strict quarantine restrictions that have been implemented in the country during the third quarter. We may still see high figures compared to the same period compared to the same period last year, but that's just going to be mostly because of low base effects. If you're going to look at it on a quarter and quarter basis, then the third quarter results may not be performing that much. However, investors right now, I believe, are looking forward. They're more into expectations already. How our corporates are going to end the year, how fourth quarter results will be, and how the economy in general will be, given the improvements that we are seeing right now, the decline in cases, the easing of restrictions, especially in the national capital region, which contributes 32% of the economy. And of course, with the improving COVID-19 situation, of course, there's the expectations that this will be further eased. I mean, there's already news saying that there's a possibility that Metro Manila could shift to level 2 before the year ends. And of course, if that happens, then of course, fourth quarter results are expected to be, you can say, overperforming compared to the
Okay.
previous quarters, and this is what investors are hoping for, which is why we're seeing this optimism in the market so far.
Japhet, what multiples are you watching out for here? Can you already give a PE ratio for the next 12 months that will be a fair valuation for the index?
Well, with respect to valuations, if you're going to look at PE ratio, that's the 5-year average of the market has been at around what 19.5,
Mhm.
19.14. So we're expecting that the market is currently a little overvalued right now. If you're going to
Okay.
look at the PE, we're at around 20 plus times. But of course, this is a current PE. Once the easing of restrictions happens, once the economic performance of the country improves, and of course we expect earnings to rise. And once earnings per share rise, then of course we're going to converge towards that 19.5 average moving forward.
Okay, let's talk about earnings. We had one, of course, in particular blue chip BPI reporting yesterday. Just for our audience to recall, 9 month net income 17.5 billion pesos, up 1.8%. Revenues, however, down 6%. Net interest income down 5.6%. Any surprises here for the first 9 months of the year, or even just the third quarter?
For BPI, there's not much surprises. The decline in revenue, particularly in the net interest income, is expected because bank lending is still tepid. Confidence towards the economy was not yet that strong the first 9 months of 2021, which is why at the same time we had tight bank lending standards back then, which is why we didn't expect much loan demand in the first 9 months of 2021, and this led to the lower year-on-year revenues of BPI. Now, with respect to net income, of course, it's also expected to rise given that lower loan loss provisions have been priced in for this year for banks. However, if you're going to compare BPI with the others, let's say Metro Bank and BDO, I'm talking from their second quarter results. BPI, yes, there's improvement in net income, but it's quite flat. Compare that to Metro Bank and to BDO, wherein their net income had high digits, double digit surges. So if you're going to look at their performances of the big three banks, we can say that earnings wise, BPI is quite underperforming.
Okay, and let's talk about those banks in general. You also have a new report here from the BSP saying that fewer banks tightened the lending standards in the third quarter. So it's kind of confusing. It's still tightened compared, but then fewer na lang. So there's a modest recovery when it comes to lending. They're lending a little bit more. What's your general feel on the state of the banking sector, particularly since the inflation, as you mentioned early on, it's still threatening with the oil prices soaring, and you've also got the central bank governor on the other hand saying he's not going to be raising interest rates anytime soon.
Okay, well, with respect to the banks, according to the BSP's latest survey, for the fourth quarter 2021, banks are still expected to maintain tight standards against businesses, while as for the households, they are expected to relax it. But of course, given the easing of restrictions, given the improving COVID-19 situation in the country, easing of restrictions, if this continues, then we expect confidence towards the economy to further improve. And with the improvement in confidence comes more bank lending, both from the households and the businesses. Now, with the BSP keeping rates at record lows, of course, this is what's going to temper. What's going to temper banks' revenues moving forward. They won't be able to charge much lending rates. But if confidence improves, if we see further more bank borrowing, then of course more transactions for banks, which is going to help their revenues and consequently their earnings moving forward.
Okay, and finally, last question before we let you go. How excited are you for the Medilines IPO? Is this something that you believe will be skyrocketing at the open? It is of course still tentatively set on December 7th, so still a lot of time there left. But nevertheless, the pricing in a few weeks already. How exciting is this stock?
Well, with respect to Medline, we're still looking into it. But what I can say about the stock, I think this is going to be I think this is the only one that's only one getting into. This is the first one that's getting into the PSE, which is focused on on high-end medical equipments. And Medline's growth will be dependent on the overall healthcare sector of the country. Right now, our healthcare sector, it's still in its developing stages. There's still a lot of room for growth. There's still a lot of opportunities out there. Now, if our healthcare sector improves, then of course there's going to be more demand for for these high end medical equipments, which of course is going to it's going to benefit Medilines. And given the current situation that we have right now, we have this COVID-19 pandemic. So somehow it urged it urged our country to to move towards this direction of further improving the healthcare services, the healthcare sector of our country. That's because of COVID-19, and because of this development that we expect moving forward. The further improving of our healthcare sector, then it's giving bright prospects to Medilines.
Okay, so something worth watching out for and doing some research on. Thank you so much, Japhet and Tantiangco of Philstocks.
You're very much welcome.
Here are other headlines we're keeping our eyes on. The Cavite government received no bids for the Sangley Point International Airport project, leaving its future in limbo. That's despite the deadline for the submission of entries extended by 30 days from September 20 to October 20, the Philippine Star reports. Cavite's Provincial Legal Office OIC Ana Mercen Pulmones told that the Philippine Star that because of this they had to declare failure of bidding. Pulmones adds that the province's PPP selection committee would reconvene next month to decide on the future of the airport development. Among the four companies that earlier bought bid documents for the project were Metro Pacific China Communications Construction, Philippine Airport Ground Solutions, and Mossbelt Law Office. CCCC and Macroasia won the first bidding for the Sangley project in 2019 as the sole bidder. Now, the Customs Bureau collected 14.3 billion pesos worth of tariffs from over 2 million metric tons of rice imports as of early October, and with that, collections have already exceeded the 2020 total. It will also add to the excess funding available to the government once the 10 billion peso commitment for rice industry modernization is met. Collections rose 3% in the year to date, ending October 8th, with incoming shipments valued at almost 41 billion pesos. Rice import duties are collected to support the Rice Competitiveness Enhancement Fund as authorized by the Rice Tariffication Law. And that's the first look into the business day. Today is Friday, October 22nd, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.